Hello and welcome to Smart Loans. My name is Kia and today I'm going to be speaking to you about what is fixed rate and what is variable rate and when should you choose which one of this. Now, before we start, let me tell you, when you go to get a loan, any type of loan, the bank will, or the lender or the broker that you're speaking to will usually ask you whether you want to get a fixed rate or a variable rate. And this is the rate which you pay the interest back on your loan with. Now, in the next section of the video, I'm going to be telling you about fixed rate, then variable rate, and then which one you should choose. Okay, so to begin with, we're going to look at the fixed rate. Now, what a fixed rate, if you go to a bank and get this basically means that between the first 1 to 5 years of your loan, your interest rate will remain the same. This basically means that if the rate that is currently on the market does change, goes up and down, whatever happens, this does not affect you. And that obviously, that's one of the benefits where you have predictability and you can do a little bit of long-term planning. One of the downsides to fixed rate, however, is that if the rate does actually go down, you might miss out on some potential savings. In the next section, we'll look at variable rate. Opposite to fixed rate, variable rate is a type of interest rate where the interest rate can fluctuate, which means the payments can go higher or lower. Now, there's two main reasons for this. Either by the cash rate, which is determined by the RBA or the Reserve Bank of Australia, which then means that the other banks, which we usually go to, have to change their rate depending on what rate they get from the RBA. Or the banks themselves, so Commonwealth, NAB, those types of banks that we deal with every day, they decide to just change the rate on their own. Now, the great thing about this is if the rate does drop, so if you feel that the economy is going in a good way, so it's about to get better, this means you could make potential savings. However, the downside is usually if the interest rate does go up and you're on a variable rate, you could be making higher payments. Now, here comes the main question. Which interest rate should you choose? In my opinion, if you are someone who is more risk-taking, more risk-tolerant, you have a higher income, you sense that the economy is maybe going into a better position, you can go ahead with a variable rate because that gives you more opportunity for reward. However, there is also risks with that. If you have less tolerance, you have a lower income, you prefer to have things stable and predictable, then fixed rate will be much better for you. With this being said, this also does matter on timing of the economy and the market. So this goes back to how much you involve yourself with understanding the economy every day as well. If you like this video, please give us a like and a subscribe. We'll be back with more videos very soon. Thank you.